Good afternoon and welcome to BizTech's Asian Midday Market Watch. Kelvin Wong, market strategist at CMC Markets, is our guest today. Kelvin, good afternoon and welcome this Thursday.
Hi, good morning, Brian. Good afternoon, Brian. Good to see you again. Yeah.
Now, Kelvin, before we get your insights and opinions, let's take a look at crypto markets first and then take a look at how regional stock markets have performed in the first half of the day. We start with Bitcoin. It's breached the 24,000 level. It's at 24,063.5. It's down 0.09%. Ethereum is at 1,901.38. It's up 0.74%. Looking across to regional equity markets, we start with the SGX, which is up 0.35%. Bursa Malaysia is also up 0.35%. Shanghai is up 0.33%. The ASX All Ordinaries is up 0.16%. The Nikkei is up 1.11%. The Hang Seng is up 1.13%. And rounding up the numbers, we've got the Kospi, which bucks the trend. It's down 0.73%. Now, Kelvin, what's your view on market performance in the first half of the day?
Well, I would say that overall it's still relatively positive as per se because number one, we could start to see that in terms of the external environment, especially we talk about sentiment-wise, the short-term sentiment is still, I would say, positive on other external major stock market, especially the US stock market, which is actually driving this kind of a positive feedback look into Asia. But Asia itself is a bit hesitant. Why? Because if you look at the current geopolitical situation in Asia, it's actually rising between China and US, especially the repeated US officials visit to Taiwan. And also there's a bit of what we call growth scare in Asia, especially up from China, where you see on Monday the industrial production and the retail sales for July coming out from China is actually a missed expectation. So that's actually a clear sign that China economic growth will actually start to decelerate further in terms of slowdown towards Q4 of this year.
Now, so Kelvin, this morning, the news of this morning is really the Reserve Bank of New Zealand rate hike of 50 basis points.
Yes.
What should we read from that action?
Okay, so most importantly, definitely it came with expectation. So 50 basis point to bring the official cash rate, which is the policy rate, up to 3%. But what's interesting over here is that they also released their expected projection going down the road. So overall, it seems to me still hawkish. Why? Because for September and December next year, they're expecting at 4.1%. So what we could see over here is that for RBNZ, seems to me that they are still on the path of hiking rates, and there's no clear signs they will actually back down in terms of having a pivot to actually start to actually reduce rate next year. So what's interesting over here is I'd like to share with you the chart of the the Kiwi dollar versus the USD. So what we could see over here is that last 2 days, we start to see a slide of a close to about 150 points decline, 150 pips decline. But what we could see over here is that it's still trading in the short-term to medium-term uptrend since the low of 14th of July 2022. And what's interesting that today's price action actually staged a positive candle, a rebound. And this rebound came very close to a key support level at this 62.90, which is also the 55-day moving average as well as the lower boundary of this ascending channel. So the current hawkish tone up from RBNZ seems to be supporting the short-term boost of this Kiwi dollar. So potentially, right, what we could see is that as long as 62.90 holds, in the coming weeks, we may see a retest of this recent 12th of August swing high area at 64.70 level.
Now, Kelvin, I want to talk about now fundamentals versus the Fed. Now, has the recent rally in US stock markets shows a mismatch between fundamentals and also the Fed's current monetary policy stance?
Yes, precisely. So actually what we are seeing right now, right, is Previously we've been discussing our shows that this ongoing rally since the start of Q3 has been particularly driven by hope. And this hope is actually looking at two things. One, inflation will start to actually plateau in this later part of this year, which is Q3, Q4. And secondly, based on this peak inflation story, the Fed will start to pivot in the later part of this year, or even starts to actually reduce interest rate in the first half of 2023, which is next year. So that's actually driving the positive tone in the rally that we see so far in major stock US indices, the S&P 500 and the Nasdaq 100, especially the Nasdaq 100, where actually it rose more than slightly 20%, 21% plus from its July low or June low, pardon me. So what we could see over here is one thing, inflation did actually show signs of peaking. Why? Because we talked about a week and a half ago, the nominal CPI number, nominal CPI, the CPI data for July actually went down slightly from June's number, and it came in below expectation. This is one thing. But on the other hand, over here is that after the release of this CPI number, we start to see a couple of Federal Reserve officials, we talk about the Fed speak, they actually came out and actually give guidance to the market. Hey, you guys are actually too optimistic. There's actually a scenario that we are not going to actually cut rates very soon. And in fact, we may start to progressively increase interest rate even until next year to actually bring down the rate of inflation to actually 2%. But one thing I want to share with you about this inflation over here is that there's this inflation data that I'm watching very closely as well. Is this data which is called the Federal Reserve Bank of Atlanta. They actually produced this sticky price inflation. So this sticky price inflation over here, right, is actually items that actually tends to actually put away that basket of items that prices tends to relatively change very slowly as compared to normal items. So you see this, this is actually a year-on-year change. This sticky price item has been going up tremendously since 2021. There's still no signs of actually slowing down. So in fact, the latest number, July number, actually came in at 5.8% year on year. So with this number over here is that it seems to me that it could actually drive down wages to actually starts to actually increase further down the road, given that sticky price inflation is still relatively sticky on the upside. So number one, there's been a concern that fundamental economic data based on what we call it, several subset of inflationary data like the sticky price inflation is still showing not signs of easing, and also guidance from the latest Fed speak is that there's still no sign of a Fed pivot to actually start to ease in the first half of next year. So it seems to be that the market is actually running ahead of itself. So lastly, right, most importantly, we talk about levels. Okay, so where are we right now? So let's take a look at the chart of the S&P 500. Okay, so very quickly, let's open up the data. So what I'm going to share with you is actually a daily chart of the S&P 500, where we're actually coming very close to a major resistance level, which is at 4310. Okay, here comes the chart, and 4390. So let's look at the daily chart of S&P. So this is the daily chart of S&P. So what we could see over here is that yesterday price actually hit the lower limit of the 4310/4390 major resistance. So this 4310 actually confluence with the 200-day moving average, which is pretty key as well. As you all know that this 200-day moving average is a psychological average that actually gauge between the we call it the designing factor psychologically between the long-term bulls and the bears. So anything that is below 200-day moving average, it tends to actually imply that the bears are still in hope or are still we call it in control from a longer term perspective. And what's interesting over here is that if you look at a FIBO retracement, which is the golden ratio taken from an all-time high, project it to the current low of 7th of July, it's the 61.8% is at 4390. So this is indeed a resistance zone to actually watch, a major hurdle for this ongoing bull that has taken shape since 16th of June. So if we can't have a clear daily close above 4390, there's actually potential risk of a deeper pullback taking shape into the SPX 500 in the coming weeks ahead. And bear in mind over here is that the daily RSI also has now coming very close to its extreme overbought level at 80% and 75%. So I would say that over here is that do be a bit cautious potentially of this current we call it ongoing rally that is coming very close to a major resistance zone with extreme overbought levels on the RSI.
Now, Kelvin, as always, thank you very much for your insights. Thank you very much for coming on the show as well.
My pleasure, Brian.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets on Vistec's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our website, www.vistec.asia, as well as our social media platforms. It will also be on our syndication partners' websites, TV stations, and radio stations. Thank you for tuning in.